Well, ultimately, it gives me hope that it's now on the agenda of many people. We have about 20% of the companies making commitments to attack climate change and stay within the Paris Agreement, if you want to. You see the social aspect of business coming up significantly more. COVID obviously has accelerated that. But the reality is, although most people are moving in the right direction, we really don't have to spend much time anymore on the why. The real question has now become how. The challenges that we have to change our society, to make it more inclusive, stay within the planetary boundaries, is of such magnitude that we need all of us. And this is where we focus on with the book Net Positive, how courageous companies thrive by giving more than they take. And it is just a very simple thing that we're trying to say, how companies can actually profit from solving the world's problems, not creating the world's problems.
Do you think that's really happening already, Paul? I mean, I know there are certainly individual examples where it does lead to better profits, or if we're talking about investing, better returns. But kind of back to my initial question, if we talk about ESG investing, for example, is that genuine, or are people playing lip service to a cause just to cover their own kind of issues?
Well, there are undoubtedly some people doing that, but in general, I think we are really moving forward because people have seen the enormous costs by failing to act. COVID has cost us about $16–17 trillion just in the US and Europe alone, and we're still putting money in these economies to come back to where we want to be. And our GDP has probably lost $26–27 trillion, according to the IMF. So we're at a point that the materiality of not acting, the cost of not acting, is now higher, actually, than the cost of acting. And business is on the foreground of that, so they probably take these first hits. So indeed, many more businesses are now seeing that it is better to have a diverse organization, take care of your people, work the issues of climate emission in your value chain. And what we increasingly can see, that the companies that do and embrace these challenges actually are also better valued by the financial market. Increasingly, you see the flow of ESG funds coming in and the financial market calling for more responsible action. A few things drive that. The consumer itself, the governments moving and making commitments, technology, which is going much faster always than people estimate, and then, as I said, the cost of inaction versus action, which probably makes this one of the biggest business opportunities that we have in front of us.
Paul, I hear what you're saying about the business opportunities, but often it does take a while to see these payoffs actually generate some return. And Wall Street and shareholders can be very short-term minded looking at these quarterly results. How do you convince a company or a CEO who very much needs to focus on hitting those quarterly numbers that this is worth investing in the long run?
Well, most of the CEOs know, Courtney, that value creation that is actually happening in any of these companies, including the company Unilever I used to run for 10 years, is at least 4 or 5 years out. You go into a new country, you build a new factory, you invest in people to get them into the senior management. These are long-term investments that companies are willing to take. And what we're talking here about is actually the same. It's investment in the future of humanity. You cannot have infinite growth on a finite planet, and anything you can do indefinitely is by definition unsustainable. And we've come to that point. And CEOs increasingly see, despite some of these pressures on short-term performance, that actually the best way to consistently get performance and keep your companies around is exactly to take care of all of your stakeholders. Just running the short-term game and the myopic focus on the shareholder has really not served us very well. The average length of the companies being alive has come down from 67 years when I was born to 17 years now. Over the last 4 decades, we've lost half the publicly traded companies in the US, and part of that is really this rat race of short-termism. Not surprising that the financial market, people like Larry Fink and many others, are calling for drastic changes in the way the financial market operates. And increasingly, we're seeing these changes happening.